The first topic of the day is like we are going to talk briefly about what these Heiken Ashi candles are, how they are constructed, and how this helps in smoothing out a trending pattern. Okay, the Heiken candles basically are a set of candlesticks which are formed by using the average prices of the previous candle, normal as well as Heiken. So the calculations of Heiken, obviously you can Google it, but what it does is to smoothen the trend for you. In a very simple words, this is what I can explain. And if you see that the open price of the Heiken candle, it is always at the middle of the previous Heiken candle. So obviously the formula for open price is high plus low of the previous Heiken candle divided by 2. The closing price of the Heiken candle is determined by the normal candles OHLC, open high low close, divided by 4. That is what will determine the closing price of the Heiken candle. Oh, sorry. So when you look at a Heiken candle, the high is formed by the actual high on the normal candle, then the high and low of the Heiken candle, whichever is the greatest. Similarly, the low is calculated by actual low of the normal candle and the high and low of the Heiken candle, whichever is lower is the low of the Heiken candle. Now, because this uses the average price, all your choppy movements of the day gets converted into a nice visual reading. Now, there could be many traders who trade price action, but who get confused. Is this going to be a reversal? They start anticipating when they see a green candle. They start trying to justify their logic and say, we'll take a buy trade here. Obviously, the trade will fail because the trend has not changed. And quite a lot of these kinds of choppy movements, you have ups and downs of various red and green candles. All these things tend to confuse an average trader. Like supposing you are in a trade on the PE, suddenly you find this candle, and you start seeing the next candle is forming a nice, strong, regular candle, right? You start thinking that it's going to be a reversal, so let me take a buy trade here. And it also coincidentally happens at a support level, then you get all the more confused. To avoid all these confusions, you will try to switch on to the Heiken candle. Despite the Heiken candle, you have a fake pullback, which you would have thought is a reversal, has become just a pullback, and then the price continued downward. Now, this is all about Heiken as a candlestick, a form of candlestick to smoothen the trend view, right? Anybody could see that visually that the trend is excellently continuing. So you have to wait for taking your profits. Now, this purpose served by the Heiken candle is not only this. We are going to use it in a different way. It's not just to see whether the trend is smooth or not. We are going to use this basis as the entry point for our trades. Now, let us start with the setting up of the spot chart. Okay. Normally, our day starts with marking out certain things on the spot chart. When the market opens and finishes its pre-open session, the number you see here will be the opening price of the day. So what we do is on the spot chart, we are going to mark the open price. Like for instance, I mark it on Friday's candle. The opening price is the first level of resistance or support for me. Why do I mark this open price? It's a very simple concept. If the price is trading above the open, I will look for a bullish signal. If the price is trading below the open, I'll look for a bearish signal. Unless I get the signal, I'll not trade. But this helps me to determine my overall bias, whether I should be buying a call option or a put option. So the spot chart we are going to also set up with support and resistance lines. We need to know at which place we should buy a P and at which place we should buy a C, right? I'm talking here from the point of view of only option buying. We can use this method for stock trading and other things, which we'll discuss at the end before we close all the formal session. Right. So, how do I mark these support and resistance levels? We figured out a heck of a lot of ideas. We said let us use the Heiken Ashi chart for 1 hour and mark all the places where higher high or lower low is not formed. The reason I use a 1 hour chart is you have 6.5 trading hours, which is it covers a lot of price action on the 15-minute chart. And I prefer the 15-minute chart. I advise people to use the 15-minute chart because if you use a 5-minute or 3-minute time frame, you're going to miss a lot of big moves, and you're going to essentially only keep scalping, and you'll be paying more brokerage than what you earn. And you will have a lot of losing trades if you go to the 5 minutes or the 3-minute chart. Okay. So I would strongly advise everyone to look at 15-minute chart as an option. And less than that is actually only noise. And you don't want to trade based on noise. You want to trade based on real price action. So after we deliberated on using the 1 hour Heiken candle and marking out the levels, let me demonstrate that for you before we move on to the other methods. Whenever you see a green candle, you want it to make a higher high. And the place where it doesn't make a higher high usually acts as a resistance. And you will keep on marking levels like this. And if you see a red candle happening, you need the price to make lower lows. And where it stops making a lower low, you mark that level as a level for support. So you keep on doing this for all your various levels, various candles. I'm demonstrating this by actually drawing the lines because I want you to see how many lines you will have on your chart. It is too cluttered. It is it becomes so confusing to read your price action with a lot of lines blurring your view. You can keep on doing this endlessly, and the more you go out of zoom out and see the chart, you will have a lot of lines on your chart. Okay, now in terms of today's price action, if I'm going to look at too many lines, what I'm interested in only is only about 6.5 hours of trading, but I'm looking at a lot of lines here. Okay, so we said, why don't we try to find some better way? I mean, this doesn't tell me as a trader where I would enter or exit a trade with so many lines happening. Which is the correct support level? Which is a key support level? Which is a key resistance level? That question always keeps haunting us and saying, are we right in this trade or not? So we thought, why not try to find some other method which will have lesser number of lines? These lines are definitely valid, no doubt at all. They're valid. But how do you reduce the number of lines you see on your chart? So we said, let us look at using a line chart instead of a Heiken Ashi chart. Now, don't you think this line chart looks a lot cleaner? And it gives you exact turning points, like in the form of a V-shaped or a U-shaped reversal, right? If you mark those lines, and also take care to mark lines which have acted as resistance as well as support, right? Those will become key levels for you. So I will only mark a few lines just for clarity. And when the price action reaches this level, you can always look at other lines where it will go next. You can see, right? Now you look at your chart. Okay, even this is too much of lines actually, right? You have so many lines still cluttering your thing. And this morning, Amog Reddy came up with this idea. Why don't we use the option chain data to get only high probability lines? So we abandoned this line chart method for the moment. So we said, let us go into the option chain and find out where are the likely resistance and support levels. Now on the call side, the resistance levels are likely to be at the place where the OI is highest in number. So you see where the maximum OI happens. And open interest, if it is high, it means there are a lot of call writers who are sitting there and trying to control the price from going beyond that. Likewise, on the put side, you have wherever the highest open interest is happening. These are high probability areas of support. The put writers don't want price to go below this level. Once it slips below this level, then people will immediately close these contracts and go down to 31,500. If you remember when we were discussing before the session started, we talked about option selling requiring a lot of adjustments. This is the kind of adjustment I'm talking about. When the buyers, when the sellers are pushing the price down, the call writers are pushing the price down, and the line I'm defending at, let's say 32,000, is broken. Immediately, I'll run to cover my profitability by taking another lower strike price. Right, I'll write puts at 31,500. Even if that also is broken, then I'll start writing puts at another round number level, right? And I'll say I'll defend at least 31,000. Okay. All these levels in between, like 31,200, 300, and all those things, you will have put writing happening, but not at a big volume. So what it shows is that the sellers are concentrated at big round numbers, and that is where we are likely to find the most highest possibility, probability, support, and resistance levels. So coming back to this call side, we can identify at least three places. First one is 32,500, then 33,000, and then 33,500. Let us mark only two of this. I'll take 32,500 and 33,000 levels. I still have my chart on the line chart mode. Okay. Now I have a 33,000 level here, and I have a 32,500 level. Now these are not exact levels based on past price action. So we try to adjust these things to fit the exact past price action by dragging the line upward. Right? You can mark it either here or maybe here, which is a better level, like 32,964 instead of 33,000 plus. And on the lower side, you can go down to maybe 32,500 levels. May you have this level is a fairly okay level, I guess, because it had a nice sharp turn. Okay. And then you move down to 32,000 level and look for price action behavior at that level. So you have in this place, there's a lot of price action happening. So if you try to zoom in at this place at 32,000 level, you will be able to mark out a fairly decent level. Here you have a double top formation. So you have 32,030 as your level. For our purposes, this much is enough. Okay. Now you look at next level of 31,500. Like you have a level here which says 31,630, which has acted as support here and a resistance here. So this is enough for me to just go ahead and start trading, because these I know are high probability zones of support and resistance based on the option chain data. Now let us see how this would have behaved. Oh, I'm so sorry. I'm so sorry. Let's see how this would have behaved anyway. As if you take the candlestick approach, Friday's trades, you had an exact turning point here, which would have acted as a level here also. and here also. What it means is that price is respecting a past level here, right? So every day, if you go by the option chain data and market level, you're likely to be quite accurate on the support and resistance level. Now, if I'm a trader and I see that price is getting rejected at the resistance, and I see a red candle forming, so I should be alert for taking a trade on the sell side, which is buying a PE, right? And if I see the price bouncing from support with a strong candle, I know that this is a good support area from where I have to buy, and price has to eventually go to the resistance level. The entire day's price action centered around this mainly. So when you're talking about the spot chart, you're going to use the spot chart for two things. One is initial bias, and number two is where to enter and exit. If your price is heading towards resistance, you will try to sell at resistance. That means buy a PE at resistance. If the price is heading towards support, right, you are going to be alert for a trading opportunity for a CE position. And if you buy a call option here, there will be a probability of success. So it depends on at what time of the day you're looking at this. Towards the end of the trading day, there's no point in buying a CE and waiting. So I would tend to ignore a trade at this level. After 2:30, I don't want to trade. I just want to see where I am after my profits are taken, and I will look for the next day's patterns. Patterns means what? Support and resistance levels. The trading is actually as simple as this. We don't need to make it complicated. We don't need to have a lot of patterns and other things. We don't need to know candlestick patterns or chart patterns. We don't need to memorize so many things. What you need to understand is that the price will move in waves, all your wolf wave theory and all those things. There'll be accumulation, then a consolidation, then further accumulation, and then breakdown, and then you'll have a distribution phase. All those things are automatically taken care of when you know which are the zones at which you will enter. Now, some people have told me that support and resistance is not an actual line, but it's a zone. I don't want to get into all those different semantics with them. What I know is when I mark a line, price is respecting that and it's reacting there. I don't care whether it's a supply or demand zone. All those are just names. What is it, supply zone or a demand zone? It's a high probability area where sellers are accumulated. That is why the price goes down from resistance to support. And price goes up from support to resistance because this is a demand zone. People are creating demand by placing pending buy orders. So you can always say it is not an exact line. You should actually draw a rectangle and all those things. Proxal line, distal line, proximate line, and all those things. I mean, it's just a matter of splitting hairs. I don't even want to think about it. I don't need to be so accurate that I'm going to take a trade only at X point. All I know is that if I take here and the price moves in my favor, I'm going to be in profit. And where is my profit level? My profit level is my next resistance level. If the next level is not getting rejected and price pushes through the next level, obviously I will look for the next higher level where the price can go to. I'll worry about that when the problem happens. I'll come to probably this level. But at this moment, for my intraday trades, I'm not interested in marking a lot of levels and watching. I need two lines. Price can go down or up from that line. If it breaks this line and goes further down, after that, when it breaks, then I will look for my next level where it is likely to stop so that I can fix my take profit. But on the spot chart, since we are discussing the spot only, we are using this basically as a bias determination tool. There's nothing else to this. You don't need to look at this once you entered the trade. When the price is going towards resistance, your option charts will tell you. Okay, I have to remove these lines. I'm sorry. Your option chart will tell you where it is likely to stop, provided you mark your support and resistance on the option chart. Now, with this, let us move on to the next topic. After the spot price and what we use it for is clear. The next topic we'll talk about is the strike price selection, which people have been asking me. Why do you trade OTM? Why do you trade deep OTM and all those things? And what should be the best strike price for you to trade? I believe that if you take a OTM trade and it becomes in the money, your profitability is going to be much higher than if you take a ATM or ITM position. Because if I take, let's say, an ITM trade with a premium of 600 rupees and that thing goes to 900 rupees, right? I'm getting only 50% profit. Whereas if I buy a OTM option at 157 rupees and it goes to 300 rupees, I get 100% profit. So in terms of percentage profitability, I prefer OTM. Plus, I can also trade more contracts with less money. It is as simple as that. But at the same time, if your strike price which you have selected becomes in the money because of increase in delta, let us say from zero point 0.2 it comes to zero point 0.5, then 0.6, 0.7, it goes on increasing. Your premium will also grow at an accelerated rate. That is what makes this entire thing very profitable, right? And we are not going to worry about theta, premium decay, and all those things because in intraday trades there is no premium decay. The premium decay will happen in intraday trades only if the price is not having a clear direction and momentum, which means it is a sideways market. Price is going up, then coming down, going up, coming down again and again. In those kinds of markets, you are bound to have a loss. You're bound to have a loss with any trading system in the world, whether it's a trend following. Probably you can use oscillators to trade the low and high, but I'm not interested in the small gains which you'll make by trading buying at support and selling at resistance during sideways market. It is simply not worth it. It is better to stay away from the trade and move on to your next level, and next day's trade will be probably better. Like for example, if you see the first 15-minute candle here formed a range, and the price has been continuously trading only within that range throughout the day, right? Yes, I could have sold at this resistance and got out at this support and taken some small profits. Believe me, the profits would have been small because the price action was choppy. There is no significant movement which is going to happen in the premium, right? And after this, let us look at how to set up our option charts. Because once you have decided the strike price, you're going to open your charts for the strike price you have selected. Now, first thing we do is we go into the line chart mode on both sides. And as we did earlier in the Banknifty spot chart, we are going to mark levels which have acted as support as well as resistance, which is a high probability zone, plus a clear U or V-shaped turning point. These are minor levels actually, right? Price on its way down, it's just pausing for some time. But the key levels will be like very sharp turning points which happen, plus multiple times it has been tested. These will be your levels. And if you move on to the 1 hour chart in this side, on the V side, you're going to see your line chart as a very simple chart. So you're going to mark your levels based on the turning points. Quite obviously, where a level has been tested multiple times is a good area. Plus, if it has acted as support as well as resistance, it is a very high probability area. So just mark these levels like this, and you're ready for actually taking the trade. Once you've done this, I've not marked all the levels here because let us stick to where the price will go. You're going to shift over to your 15-minute candlestick chart. Okay, this is how your chart will look with all the lines drawn. Now, why do I need these lines? I need these lines to determine where to exit my trade. Okay, and I will do this only when I get a clear price action signal that price is wanting to turn from that point. The some people could say that having a line chart based support or resistance will be a wrong thing to do because it doesn't cover the wicks. Rather, it only focuses on the closing price of each candle. That's okay. I'm not wanting to be super accurate. I just want to know approximately where to exit my trade with a profit. Right. So to that extent, I'm not interested in 100% accuracy on these lines. I just want to know if the price is coming here, whether it will cross this line and go upward further, or whether it will turn back and come towards the support level. The moment I see some price rejection happening at this level, I'll get out of my trade. Now, let us come to the Heiken Ashi based trading system itself. This is the founding stages of the method itself. What we are going to do is we are going to let Heiken Ashi tell us where to enter the trade, right? And then we are going to see where to exit the trade with a profit because we have marked our levels there. The rules for Heiken Ashi trading is a very simple thing. Whenever you see a red candle, it represents a buying opportunity when the price breaks the red candle's high. Okay. The, Whenever the price breaks the red candle, that means your momentum is shifting in favor of the buyers from a previous downtrend. So as option buyers, we want to only buy on the red candle high. Okay. Now, is it the Heiken Ashi red candle or the normal candle at that time? I want to take the Heiken Ashi red candle as a timing tool, and I keep marking my levels to see when the high will break on the normal candle, I will enter the trade. So even before I got a Heiken Ashi red candle signal, I had a small high break here. I would have taken this trade with a little bit of more risk. But if you strictly want to go by the Heiken Ashi candle, you would look at this candle and then you would say this high is not broken, so I will only look at this candle. So the third candle of the day, which is this candle, is where I will take my entry. And the moment I've entered at 406 or whatever is a high price, 407, maybe I'll get entry at 410 rupees. My mind will start shifting its focus and saying, where do I exit now once I'm in the trade? And I will obviously keep a stop loss at the entry candle's low or slightly below that. So I have a risk of 407 minus 342. I have a 60-point risk. Actually, I would not have liked to take this trade. But since I got the signal, I may take the trade and hope for the best. So 339, 407. It's too much of a risk for me. Okay. I'm going to lose about 1,500 rupees if I'm wrong on this trade. So I mark my entry and exit levels. And once I'm in the trade, I don't think about anything else other than exiting with profit. As the price pushes forward and keeps moving, I'll keep on trailing, not even trailing, I'll just watch the price moving. And at each level, how it reacts, I'll watch. And wherever I feel that price is not going to continue any longer, I will exit my trade. Sometimes it can happen that prices got rejected and you, before you could exit this, even this red candle is formed. That's also okay. You take a slightly lesser profit, but still you are in a green when you exit. And if your target is hit, you exit, then the stop loss has got no relevance for you. Right. So this is the entry method we follow in our Heiken rules. And the second part of this rule is when you see a grand green candle, you are supposed to think of only buying a selling opportunity, not buying. I'm not an option seller, so I don't like to take entry at the selling side. So I will wait for red candle to form again and again give me a signal. Now whether I take this signal or not is a different issue. If it is not near my support level, I will not take this kind of signals. I will wait. If it is falling exactly at a key support level, which I marked previously, then I would want to take the trade because that would be more high probability of moving towards the next level of resistance. In between support and resistance, there is no trade for you. You please ignore all these kinds of signals if it happens in between support and resistance. Now on the PE side, we started the day with green candle, so I waited. The next candle also was a green doji. Again, I had to wait. When a red candle started forming, I place an entry order above the high of this red candle. If that doesn't get triggered, I move to the next high, and then the next high, and then the next high. At one place, suddenly this entry order gets triggered. It also happens to be a point at which there's a price bounce from support. Now, if you look at the normal candle situation here, you had an excellent bounce from the support, and this confirmed the bounce, and we entered on the high of this candle with the low of this candle as a stop loss, which is very close to my support. Now, having entered this trade, I'm not going to look for any further trade on the CE side, thinking that there is going to be a price reversal or something like that. My price reversal will get confirmed when my stop loss for this trade gets hit. You enter at 233 and stop loss is 205, right? Your loss is going to be small. Unless the stop loss gets hit, I refuse to look for a opposite direction trade. Clear? Okay. Now, with this set of rules which we have in the Heiken system, is actually only two rules. Don't enter on a on a green candle. You just wait for the red candle to form and enter on the high of the red candle being broken. That is the only two sets of rules. I have something which I keep as a screensaver on my mobile, where the rules are clearly written. Never buy on a green candle. You only sell. Think of selling. Never sell on a red candle. You only think of buying. These are the two simple rules. Where will you buy after the red candle high breaks? Where will you sell if the low of the green candle breaks? When I say sell, we are talking about buying a PE contract rather than selling the option itself. We are not interested in selling options. So this is how we set up our chart and wait for the price action to tell us what it wants to do. So looking at your Banknifty spot chart, if it is falling from resistance, obviously you're going to think only in terms of buying a put option until it reaches the next level of support. Until the time you're safe in assuming that you don't want to go for a call option trade. So you will refuse to take this trade. You will avoid this trade because Bank Nifty tells you that prices are going to fall from resistance. Okay, it could happen that after the first three candles, no, you already started seeing some kind of strength here. It could happen that you take a CE trade also. But once in a while it happens. Maybe you will take a couple of wrong trades or forget to exit your CE trade with a profit. It will only hit your stop loss. That is the absolute worst thing that can happen to you. Okay, nothing worse can happen, no, because once your trade hits the stop loss, you know that the trend is not what you thought it is. So you have to look for an opposite direction trade. Or once your target is hit, and then the price starts moving away from you, then also you look at your reversal trade. Until that time, you don't do anything. Just place your trade and wait. You're not going to look for any other trades unless your stop loss on this trade is hit or target is not hit. If stop loss hits, you're perfectly free to go to the CE side and look for opportunities there. If stop loss doesn't hit, you have no business to go into another trade. Just keep quiet. You have to be patient. Friday's trade tested a lot of our people's patience. It was doing nothing for quite some time, and it was not going up. It was coming down, threatening to hit your stop loss, but it did not hit. And then again, it started going up, and people were very relieved when they wanted to get out with a profit. So immediately they started taking profits. Some of the days you will have trades like this. You can't avoid them. You have to just learn how to handle yourself during that time. Now, this is as far as the strategy is concerned. The strategy with its rules is don't think of buying on a green candle. Don't think of selling on a red candle. Look for a buying opportunity when you see red candles and enter the trade if a red candle high breaks. The rules are that simple. And at some point in time, your mind will start playing tricks on you. Right? You're going to have a lot of emotions going through your mind, and your mind will say, "Why are you not entering a trade here? There's a breakout," and all those things it will keep saying. Please ignore everything else. Please ignore any market noise from experts or Twitter or TV or whatever it is. People give so many views, even in a lot of Telegram channels. You don't need to follow every one of those views. You have a system, you stick to your system, because mindset is the most important thing in trading. The strategy is stupidly simple, no? So you don't need to think too much about the strategy part of it. It only is a mechanical process of determining a entry price and a stop loss price and marking your levels where you will exit your trade. This is the simplest trading possibility which you can ever have. It is not the strategy which makes everything click. It is your mindset. It is about your handling your psychology. That is what is going to make everything click for you. And I can only say that the Heiken method deals with many of your psychological issues which you will face during the trading process itself. Number one, by entering at the lowest possible price, your fear will, by and large, reduce to a big extent. And if your fear is not there when you're trading, you have won half the battle. The next part is about greed. These are the only two emotions which can shake the trader's world, no? So, if you're as a trader, if you are able to handle fear and greed, then you're okay with your trading process. You're in fact better than many of the 90% of the traders, which is something to be really proud of. On the emotional side, you don't have much of fear because your stop loss is small. And on the greed side, you control your greed by exiting at resistance levels, and you just wait for some more time. If the resistance level is broken and the price wants to go up even further, you can always look for a second trade and enter again. There is no big deal because by now you know the price history and how it has behaved. What you don't know is where it will stop next. So you again will go back to your chart and start marking out the next level, and you wait until the price reaches that level. Trading is more a game of patiently waiting for your entry and for your exit. If you rush these two things, then you're not going to get optimal profits. Sometimes you may exit your trade too early and then later regret, why did I exit so early? If I had held on, I would have got three times for 3x RR or something like that. This happens, it's called trader's regret. And when your mind starts playing tricks on you, people talk about a kind of various biases in trading. One is called the confirmation bias. Once you are in the trade, you are looking for evidence to prove that you are right in taking the trade. What it does is it prevents you from recognizing that your trade was wrong and you should exit or let your stop loss hit and get out. It makes you hold on to a losing trade. And if you don't have stop loss in your system, it can be disastrous. Disastrous in the sense the entire premium you can lose on an expiry day. The rest of the days you may have substantial loss depending on the quantity you trade. But you cannot lose more than 100% of your premium. That is the advantage of option buying. And if the price decides to run away and go to much higher levels, your profit is unlimited, meaning your risk is limited and profit is unlimited. That is what, as a trader, I would like to have. I don't want to do the option selling where my risk is unlimited, but reward is only limited to the premium I collect. To that extent, I prefer option buying, and I will focus all my effort only on this. And this also, in a way, breaks the myth created by various option sellers that option buyers always lose money, and buying OTM options is a foolish thing. If you see YouTube videos, they keep saying that one of the top mistakes made by the option buyer is that he buys far OTM contracts. I'm saying that far OTM contracts are also profitable provided you know what you're doing. What you need in an option trade is that trend as well as momentum should be in your favor. If trend is not there, you're not going to make money. Now, if there is a trend but it is not moving at full velocity, then your premium will more likely to erode than give you super profits. But when you have a high momentum happening, it could be any reason. We don't care about what the reason is. When the price starts moving with momentum, like what you see here in this chart at this time, after your entry price has continually moved up, you would have definitely made a huge amount of money on this. So if trend and momentum are in your favor as an option buyer, you will make money. So stop thinking that option buyers will not make money and OTM contracts will not make money. There are many times OTM contracts give you super profitability, like 10 times, 12 times your capital as profit. Those are bumper days where you can sit and enjoy only the profit. Some days you may have lesser profit, but I look for at least 70 to 100% of my capital as my profit. And most of the times it does get achieved. If I don't do something stupid, I wait for my 100% profit and exit. On days it doesn't go exactly up to my level, I may end up probably with 70-80% profit, which is actually not a bad profit. If anybody says this is a bad profit, then I'll have to ask them to show me proof that they can make bigger money on an option buying scenario. Most of the traders who sell options can't boast of this kind of return. They will be happy with probably 3%, 5%, or maybe 10%. If you know what you're doing in the options business, you are definitely going to make a fairly big sized profit. And your entry, exit, stop loss, everything is covered, and we have covered our support and resistance thing. Now, the final thing where I wanted to spend some time on, which is also because of some criticism I had, saying that this fellow is only talking about option buying and he is not talking about stocks. So what I'll do is I'll take some random stock. Bharti Airtel I'll take Dixon Technologies. Then I'll take one particular stock which I like very much, which is called RK Forge. Okay. Now, when you look at the daily chart of these kinds of stocks, this is RK Forge. Okay. Let us assume that we are trading this as a with your Heiken Ashi system. Now, there are two aspects. One is, do you want to do a swing trade or an intraday trade? Now, let's focus on swing traders first. Now, the same Heiken Ashi rules will apply. Whenever you see a red candle, you will buy above the high of the red candle. And you will not worry about a pullback because it is not hitting your stop loss. So you will hold on to your trade. And you keep on seeing your price moving up. At some stage, you may decide to move your stop loss to a higher level so that you protect your profit. That is at your discretion. What I would prefer to do if I'm in a swing trade, I would keep moving my stop loss to the low of my previous candle so that when that low is hit, I'm automatically out of the trade. And then I look for a next entry. So if I'm trading Dixon Technologies, I don't know if it's a F&O stock. If it is there, then you can even hold it for a month. So you can have a good swing trade experience out of this. So until the low of your previous green candle is not broken, you will continue to remain in your trade. Now you will avoid all your short trades in a swing trading scenario. You will look for only buying opportunities unless you're trading futures. Futures is again a different ball game. You can take both sides. You can take the trades, and you can definitely make some money out of that also. Now, if I look at let us say next stock is what let's say Tata Chem. Same principle. Use Heiken red as an entry point and keep riding this entire trend until one day it breaks below the low of a green Heiken candle and you are out of the trade. Now the second part is, let us move on to the intraday aspect of this thing. Now the intraday trading rules, we talked about option buying scenario where we only focused on the red candle high being broken. Now in a stock trading scenario, you can take a short entry, you can take a long entry. So we are going to use both the candles like green as well as red to determine our entries into a short trade or a long trade. Again, the same principle is the same. Like you see a green candle low being broken, then you will take a short trade. If you see a red candle high being broken, you will take a long trade. This is actually such a simple thing. So you will only keep on repeating this, and quite naturally, you're going to have a little bit of losses on choppy days, and where the price action is not very clear. You're definitely going to have some losses. But in a stock trading scenario, the loss is not going to be very huge. Okay. And because of your Heiken criteria, your stop loss will protect you from big loss. You could have some volatility which kicks you out of the trade. That's fine, but it's not going to be the end of the world if you make a small stop loss hit and you take that loss. World is not going to end tomorrow. You're going to again trade. The principles of trading will remain the same. Heiken rules we will follow very strictly, and we will do both our intraday trades as well as swing trades. If you want to hold a longer term trade, frankly, I am not the person to even advise you on this because I never trade my whole. I never hold my trade beyond one day. End of the day, I have to close all my positions, take my profit or loss, and then sleep peacefully. That is how I look at my trading aspects. But because some people wanted me to address the swing and intraday trade on stocks, I brought up this topic. Now, I'm sorry. Now let us look at USD INR futures. I'm just trying to demonstrate that same method can work in all the tradable instruments which you see. Anything which has a price movement up and down, you can definitely go into trade and make profits out of that. Heiken method is extremely suited for this. Now this is currency. Then let us look at commodities. commodities, people usually think about crude oil. I'll also do the thing, right? Look at how clearly you get your moves. And again, if you shift it to intraday also, it tells you clearly. You can mark your support resistance levels also very easily with this. Can you not trade between these two lines? It could be a very simple form of trading. You don't need to think about anything else. You just enter the trade, put your stop loss on the high of this candle, entry candle. Because the low was broken, you got entry, right? And you keep on doing this again and again. It works on crude, it works on currency, it works on crypto. Crypto, I can't show you on zero the chart, so we use trading view for that. And I don't trade crypto, so live trading I will not be able to show you. But I do a lot of paper trading on crypto and with trading view, mainly as a practice for my Heiken method. It gives me the discipline to hold my trade. It gives me the discipline to wait for entry. So I guess these are my thoughts about all the tradable instruments. And I'll go back to Banknifty, which happens to be my favorite. This is where bulk of the money you can make. High return possibilities are huge in Banknifty. So with this, I'm closing my formal session now. If some of the newcomers who feel that this is enough for them and they want to exit, they can leave. If you want to stay on, we can do a lot of questions and answers if people have doubts. All of you are free to stay, of course. Definitely.
Sir, Bela Patel and Mr. Ramesh Narayanan have questions to give these hand.
Definitely, definitely.
Yeah.
Hello, sir. Good evening. I'm Bella.
Yeah, good evening, Bella.
Sir, I have one suggestion, like bit and two queries.
Yeah,
Uh,
sure.
in queries, sir, you showed the strike price. I don't remember, but the premium was around 500. So my question is, approximately what premium you prefer to buy?
I prefer to buy less than 100.
Okay,
Okay.
okay. Yeah, that's why at that time the stop loss was 60. You said it was big. So I was wondering, like in 500 premium, the stop loss 60 stop loss is
It's
big
not
or
very
no,
big.
that I
It's
don't
just
know.
10%.
Yeah, so my question is, like, what is ideal? Ideal means what percentage stop loss you prefer? Matlab,
See,
in
what you
100,
do, what you do
20%,
is,
25%? Yeah.
in fact, I keep a limit of 20%
Okay,
because
okay, yeah.
that will wipe out 30% of my capital.
Oh,
Okay.
yeah, yeah. That's
So
why in 500
I'll
strike
still
price,
have,
100 stop loss also. Hmm.
I'll have my remaining 60% to trade the next trade. No,
Yeah, yeah, yeah.
I don't want to
Okay,
wipe out
okay.
my entire
I
capital.
got.
So maximum I look at 20%
Okay,
as my ideal stop loss.
okay. So when you keep 100, like your premium restricted to 100, so your lot size will increase, right? So
Definitely.
there won't be any issue. Yeah.
Correct.
One suggestion was there about this support and resistance.
Mm-hmm.
I have somewhere 25. Yeah, we can calculate 75 minutes is perfectly matches with our day. That is
Bella,
6
can I
hours,
interrupt?
15 minutes.
Can I?
Bela, your voice is
So
cracking.
Your
I
voice is
have just
cracking.
tried 75
Hello,
minutes.
Bela, can you hear us?
Just a minute, I'll connect another.
Yeah,
I'm
yeah,
joining
now,
with
now
connecting
it's
another
clear.
Bluetooth.
Now
Okay,
it's
okay,
better, yeah.
Now you'll have to
okay,
repeat
okay.
what you said regarding this
Okay, so
suggestion.
should we try 75 minutes? Have you ever tried? Because just the thought came in my mind and I plotted some based on Heiken 75 minutes support and resistance because
75 minutes.
75 because the day is 6 hours 15 minutes. So
Correct.
75 is exactly it's divided 75 minutes.
It actually doesn't
So
matter, Bella, because the price has stopped somewhere, And when you're marking based on the Heiken Ashi, whether it is 60 minutes or 75 minutes, you're going to mark only the
Okay.
places where the prices have stopped, no? So whether I
Okay.
use
That I got.
75 minutes or even 3 hours, it won't make a difference.
No, yeah. Okay. That's it. I had just like it came in my mind that
You had one
what
more
is
query. You
we
said
we
you had,
plot on 25 minutes. So that was only like two query I asked you
but
about your
you said,
Swami sir, I
preference
think
for
her
strike
second
price.
query was, second query was
second
marking
query was
support and.
percentage of stop loss.
Hmm.
Okay,
Percentage
okay.
stop loss and suggestion was 75 minutes. Yes.
Correct.
Okay,
Okay.
sir. Thank you, sir.
Thank you so much.
Yeah. Thank you, sir.
Ramesh here. How are you?
Ramesh, tell me. I'm good. How are you?
Okay, see, it was a good session once again. But
Uh-huh.
one point or a few points which lingering in my mind is
Mm.
one. Right now, what we are putting a support and resistance line based on
Mm.
a 1 hour chart is
Okay.
everything is good when we speak about the past data. And the
Correct.
future data will also respect the same lines perfectly. But
That is what.
what happens if
Mm.
a gap up or a gap down opens it
Mm.
out to?
You will move on to the next level, no, Ramesh? If there's a huge gap down,
Correct.
right, you will start looking at the next level for your possible entry or exit.
Okay. Now that is for the what you say is like creating your spot chart line, making the lines support and
Yeah.
resistance lines.
Yeah.
Now, after making this support and resistance lines, we are going into the option chart on buying, whether it is
Correct.
on at the money or out of the money, it does not matter. We make
Okay.
a buying at that part of time.
Correct.
Now, once when we start looking, buying the chart, do
Mm.
you think that it is better to concentrate on the options chart, or you should be going behind both the charts in terms of a spot as well as this?
You should ideally be looking at both the charts because you know where price is likely to turn from a resistance,
Correct.
right?
Correct.
Basic rules of price action trading is what? Buy at support, sell at resistance. If I
Correct.
see price is coming near resistance, I will get ready to sell
Mm.
or I'll buy a PE contract. This tells me that I should focus more on the PE rather than on the CE.
Correct.
Morning price action, you see it has come here.
Mm.
Okay, next level it can go to is the resistance. So immediately I should think of what? I should think that when it reaches resistance, I will buy a PE contract,
Okay.
right? Instead of
No.
thinking whether I should make a small profit on this CE contract.
If you notice the same fourth candle in the options chart.
Yeah,
Okay. Now the question, see, it's really difficult at that moment of time when it happens it out in the live market. Like
mm,
take an example in a option chart, the fourth candle only is breaking up above the
correct,
third candle. Means
correct,
you are getting an entry only on the fourth candle.
correct. On the break of the third candle high.
Assuming that you have picked it up around 3, 4, 10, 420 or something like that.
Mm,
And we normally expect, like as you rightly says, if the previous candle, the third candle's low is going to be the stop loss.
correct,
Now, which works it out to approximately 60 points down the line. 60 points
exactly,
works it out to approximately 1,200 rupees.
correct.
And if we have to expect 120 points in our hand minimum, am I correct?
I mean, if you want to look at 1:2 risk reward ratio,
No, if it is 1:1 also, like take an example of 410 or
okay, 60.
420.
So you're saying I should get 120 rupees as my reward,
Correct, normally.
right? Okay.
So if now that
From
candle itself,
407, it reached a level of 553. Is it more than 120 rupees?
no, correct, sir. But being in Heiken, we don't know what is the exact price on the
Spot chart
on the
also
data.
we'll see. No, what is the big deal? You have everything in front of you. You
Approximately
entered at
150.
407. Price
Hmm.
went to 553.
It's approximately 100 points. Let's say 120 points.
Yeah, 120 points you made.
But it's really difficult to continue with the trade only for that purpose
No,
because
why is it difficult? You
no,
want when you enter
no,
the trade, you are going to focus on two things. Either the price can hit your stop loss or it can hit your target.
Okay, just 1 second. Can you just pick the 32,900 call?
32,900.
That's correct. Same day on the 32,900 call. What I did on Friday, I'm just trying to see, but I'm unable to carry it for a longer period of time. Okay, what I did was after the second candle, the third candle, okay.
High was
candle-
broken. You are entering the
Correct.
trade.
I picked it up. I picked it up around the 360 or 370, something like that.
Okay.
And then came out around 440.
Okay.
But my happens it through like I could have hold it for some more time, but I did not because a little bit scary. As psychologically it was. This is third candle it broken.
Correct.
Third candle broken, so I said let us try to above the third candle. I can go for it. So I picked it up somewhere around of 400, 360 to 380, something like that. I picked it up once again, and then I continued the journey around 440 to 450.
Okay.
But after that, I was a little bit scared to go for the PE call.
Okay.
Why? I don't know whether that is a foolish, what you say is like, pullback rally or something like that, trapping or something like that. The fourth candle, the next candle, and the third candle from there, where your cursor is right now.
Yeah.
So I don't know how in the live market, how to find whether this is perfectly going down or not.
Okay. In the live market, you will again shift your spot chart and see what the price is doing there.
Okay.
So your price is coming down.
Correct.
Right. And even if you look at the Heiken Ashi candle on the spot chart, you have a green candle whose low is broken here.
Correct.
At 10:45.
Mm-hmm.
So 10:30 low is broken by 10:45 candle, which is this low is broken by this candle.
Mm-hmm.
So you're going to get entry at this low or slightly below that.
Correct.
Right. So it is exactly mirrored in your chart also. Here it is breaking and going down. See, the moment your CE chart is started forming red candles, you obviously know that price is moving in the opposite direction. And if you get an opportunity to trade in this side, you will look for an opportunity.
See, that is where the scariness comes into the picture. Whether to enter or not to enter is a question mark comes in.
Why would you not enter, Ramesh? You're seeing prices rejected at resistance.
Okay, sir,
it is forming lower and lower lows. Why would you hesitate to enter? Price has to go to the next level. No, up to support at least it has to go.
Okay, just 1 second. In this spot chart, the second candle broke the first candle opening mark.
Okay.
Based on that, I picked up my purchase of 32,900 call on the third candle.
Correct. You are absolutely right in doing so.
Correct. But thank God I could be able to make a smaller profit. But what happens is like after that, when I started thinking about a HA candle, I felt like from the fifth, sixth candle onwards, it was going in a sideways. So how to overcome that sideways? That is a major one which I am just looking for.
I can see in any trading system, you can't overcome the sideways movement. If it is there, it is there.
Correct. Yes.
That is why I am saying, Ramesh, when you enter the trade on the options chart, your stop loss is already determined.
Correct.
You have marked your support resistance level somewhere.
Yes.
And your target exit point is also determined. There is no uncertainty here. If I enter the trade and if it is not hitting my stop loss, it is going towards my target.
Okay.
There is absolutely no uncertainty. I have to exit when my target level is reached.
Very true. Very true.
After that, you are going to look for a fresh trade opportunity based on the spot chart and what the price action is saying on the spot chart. The price action is telling you clearly that after a rejection from resistance in this candle itself, green candle itself, the next candle formed as a red candle. And the third candle after this is again breaking it's also forming a red candle after being rejected at a higher level. With three different pieces of information telling me that price wants to go down, why would I hesitate to take a PE trade?
Okay, here I have one more question in the 1, 2, 3rd, 4th candle, which is a big green candle.
Mm.
Okay, which I exited my call.
Exactly.
Now, as per HA or the normal, do you wait for the green candle low to break or the next second red candle low to break?
For the entry into PE.
P, yeah.
Okay, now you are talking from two different angles. Okay, one is when you're looking at the spot chart, you are looking at it to see whether the trend is changing or not.
Correct.
Okay,
Correct.
when you look at the option chart, you don't want to deal with a green candle and buy anything.
Correct. Very true.
Okay, option chart is totally different. If I see green candle, no buying.
Correct.
I have to only think in terms of selling. I sell
Yes.
at a point which I determined as a support or or a resistance level.
Mm.
Okay, I have no business to buy on a green candle in the option chart. Whereas in my spot chart, when I see a Heiken green color candle,
Mm.
it represents that price is going to move downwards if it breaks this low.
Okay.
So effectively, what I'm saying is the trend is now changed from upward trend to downward the moment this low is broken.
Correct.
Simply because the price momentum has changed.
Okay.
From a bullish scenario, sellers have entered the picture. Sellers have entered the picture by doing what? Creating an uncertainty here, then rejecting the price at a higher level and pushing the price down.
Yes.
You have this much evidence to say that you're now supposed to only look for a sell trade or buying a PE.
But no, which place I have to look for it? Not in the green candle. The second red candle, you have to look for it. Correct?
No, that second red candle coincidentally happens to be the breaking
In
point of the low green
Heiken.
Heiken red,
Yes.
right? Now,
Correct.
if you see this, where the line is formed,
Third.
on the third candle low is where you would take the entry.
Correct. That is where, see, now the 4th candle when I take an entry, assuming that I am taking an entry at 4th candle.
Okay,
And I
the
was
fourth
just
candle
waiting.
will trigger your entry,
Correct.
and then your price is continually moving down. No,
Yeah, அதுக்கப்புறமா then it becomes an sideways for some
yes,
time.
it becomes sideways. So what is our rule? Supposing you forget that this is a Banknifty spot chart. Supposing
Okay.
it is a stock trade you're taking.
Okay.
Your rule is after the entry candle, your signal candle is this one.
Okay.
You've taken a short trade based on the
Okay.
break of the low.
Okay.
High of this candle is the stop loss.
Correct.
So as long as this high is not broken, you don't have to worry. Let the price move sideways. Let it stop in one place. Whatever it does, you don't have to worry.
Yes, sir. See, I have one question. Like, since we are speaking about a spot and the option, where option price fluctuates heavily, suddenly, there is a small spark which comes in, where
Correct.
a huge line comes into the picture, or in a wick, you can say it like, eats up all the stops with whatever we have kept it through. Like, take an
Okay.
example of around 1 o'clock chart in that 32,900, around 12:55, 1 o'clock. No, in the side, left hand side.
Okay.
Then it's next one, next one.
Yes.
That one. That one has picked up heavily on the top and the bottom. Both the stocks are being picked up.
Correct.
Where we are, that's what you say is like, dull, or we might lose out the profit or anything like that. So we wanted to reduce the loss.
Ramesh, let me clarify this. Number one, you have taken profit on a CE trade.
Correct.
Then your PE entry got triggered. Let me wipe out all the lines first. Okay. Let's have only clear price action going on. Now PE trade got triggered after the break of this candle on this high.
Okay.
This is where my Heiken gave me a signal.
Correct.
Okay, this Heiken high, which is supposed to be broken, actually broke on this normal candle.
Correct.
At this point. Now my stop loss, let me change the color to red to indicate it's a stop loss, is here below the low of this entry candle. Correct?
Correct.
So entry is at 233 and stop loss is 205 rupees. Okay,
Okay.
28 points stop loss. Let's say 30 points.
Okay.
Now, until and unless the moment my PE trade has been triggered, until and unless my stop loss hits or my target hits, I will not look for any other trade in between. Your 12:45, 1 o'clock candle, I will not look for anything. And there's no trade for me here.
Okay. Can
Simple
you just
reason is
change?
I'm already in a trade which has not matured. It has not given me the final
Okay.
results yet,
So
no?
can you just check 32 500 put in that place instead of 32,000, 32
Sure,
500?
sure, sure.
Because because I prefer to go nearby the option,
Mm.
which will help me to make the quick buck and come out of it.
That is actually a fallacy. I thought I would have explained clearly enough. I'll
Okay.
explain it again.
Please, please.
Okay. Now, in this 32,500 put option, your entry candle, your signal candle is this one, 10:30,
See, it's like, yeah,
right? So my
yes,
10:30 candle on the normal chart is this one.
yeah. That is
So
on
I
top
mark
of it.
above the high.
380, let's say.
Okay. Let me go to this color itself. Black itself is okay. Let's say I'm taking it 375 or 380.
Correct, yeah.
Now I'll mark my stop loss in red below this candle's low. So I have a stop loss of what
60 points.
42
60.
points,
Let's
maybe
say
40,
50 points, yeah.
let's say 45 points.
Correct.
Okay. Now this is going to be my maximum loss if I lose this trade. At no point after this stop loss entry, you have had any situation where the stop loss has been broken. Price did its up
Very
and down
true.
thing. It did not break my, it did not hit my stop loss. So as far as I'm concerned, I'm still in the trade. While I'm in this PE trade, why would I look at a CE trade and get confused? My trade has not matured. It has to either hit my stop loss or hit my target.
Yeah, see that 1255 call, that green color, big, in the PE trade, in the PE trade.
Yes.
That one, see that the moment when you like I am in a bought it at 380 and my stop was around 320 or 325, which I put it on through. The way how the charge or the chart was going down, you know, whether do I need to lose that more and more on this trade makes me nervous in terms of coming out of it earlier at that moment of time.
Why come out of it earlier? Your stop loss is already small, no, Ramesh?
Yeah, correct, sir. But here I made only 60 points, 60 or 70 points. So I don't want to lose it out another 60, 70 points in the stop loss.
So you're trying to exit at break even.
I exited at around of similar price.
What is the point in trading? You might as well have closed the trade and gone away, no?
So I missed it out that point. I don't know. Like, that is where I am getting it. Like, this type of doji comes in. What to do?
You don't have to do anything, Ramesh. You just mark your target exit point. If the stop loss is not hit, price is moving from a support level to some level which is called a resistance level. Now, until it hits the resistance level and exits you from the trade, why do you want to meddle with the trade? Just keep your fingers to yourself. Don't look at your thing. The problem is you itch to get out when the price moves against you.
Correct.
That means the purpose of trading with the stop loss itself is defeated, no? In spite of the stop loss, if you're going to be afraid, stop loss is meant to be meant to prevent you from being afraid, no, Ramesh?
Correct. Very true.
The worst thing that can happen is it'll hit your stop loss. Well, let it hit no one day. It'll not make you a pauper, no.
That is that.
If you will become a pauper by the stop loss hit, then you have to trade with higher capital. Simple.
What does the doji means in Heiken candle?
Nothing. It is just indecision again. Heiken candle mein doji can be either a continuation pattern or it can be a reversal pattern.
Because if you notice that 10, almost 7, 8, or almost all of them are doji, you know.
I mean, what can I say about it?
No,
It is an indecision happening.
yeah, that is correct. But that is where I got little bit tense, to be very frank.
Ramesh, please make up your mind that you will not get nervous. You have your stop loss to protect you from being nervous.
Mm.
Beyond that, God cannot come and do something miraculous. No.
The reason why, sir, many a times, I'm sure that most of the traders also will accept. We put respective stop losses, and I have all my trades, almost I will say that 70% or 80% of my trades hit the stop loss and goes to hit the target as well. After hitting the stop loss.
Unfortunately, Ramesh, you've been trading some other method which creates this problem. Try this method.
Okay, this method, that is why I wanted to be little bit more careful on doing it, and did it on Friday, and I felt really comfortable. But in the PE trade, I just little bit faster came out of it.
Believe me, all of us were nervous at the PE trades. Okay, because the price was doing nothing. It was going up and down and up and
Correct.
down.
It
We
was
were
leading.
getting more than nervous. We were getting irritated.
Correct.
That feeling of irritation says, "What the hell? You're close your bloody trade and move on."
Correct. Very true.
If you didn't close the trade, you always had a good possibility of profit.
Very
You
true.
entered at what, 380 rupees and you got 479 rupees. Damn good profit, no?
Very true. It could have been, if I would have waited for another 20, 15, 30 minutes, I could have made
That
it.
is why as a trading psychology tip, I'm telling you, let the trade hit either your stop loss or your target. For heaven's sake, don't keep on tinkering with the trade, thinking whether I should exit. There's a red candle forming. It is a strong red candle. These are all the ways the mind is playing tricks on you. Okay, if forms a red candle, it again reverses the trend. So what is the worst thing that will happen? Stop loss will get hit. That's all, no?
Okay, one more question which I have, the HI candle, if, as you were mentioning it about, if it is not making a higher high or lower low.
Correct. It forms the area of support or resistance.
Yeah, irrespective of anything, first before candle and the next candle and the third candle, if take the before one, the previous day, just go to the left on that cursor.
Okay.
I'll the green candle. Next, that one. You see there, from there onwards, it is making a higher and high.
Okay.
Now, the moment when the next candle becomes not making a higher and high, does it say anything? Like the red candle, bigger red candle on the fourth, on the second red candle on the right hand side. Right, that's one, third red candle. 1, 2, third red candle becomes low. It's not making a lower low.
Correct.
And does it say anything for us to be ready for those type of a lookout for it? Or do we need to
it only tells you there is an area of support there which the price is respecting. That's all it says. Now, having found an area of support, okay, let me explain it clearer in a normal chart here. Okay. What does a trader typically do? He marks support resistance levels. Okay. He waits for after buying at support based on a confirmation. He doesn't just blindly buy at support. He says price has hit the support line, then it has bounced back. It has given an entry after breaking the high of the bounce candle. This is where he enters. Typical price action trader. This is what he does. Okay. For us, instead of depending on a bullish engulfing or a piercing line or a whatever morning star, evening star kind of candles, whatever patterns you can think of, we are simply relying on the Heiken candle to say this is a place where you should be buying. Now, if my Heiken candle is giving me a signal somewhere else between support and resistance, I should not be trading those kinds of signals. Okay.
Yes.
The moment I've determined these are my key levels from which I'm going to approach my trading. If I enter a trade at support, I want it to go till resistance. In between, if I get some sell signal, I will not take.
Yeah, that is where happens it through many times.
That is where people lose also, no?
Correct.
If you take a trade at some random point, then you have to face your losses.
You see,
So
the conviction is not happening. Actually
the
speaking, what you
conviction,
say is that you
the
should have a
conviction will
conviction.
happen only with a lot of practice. I've had 4 months of practice using this. I can easily understand that you guys don't have that much practice. You're bound to get confused. What I'm saying is, unless you have a clear bounce from support,
Mhm.
don't take an entry. Okay.
Correct. Yes.
And for heaven's sake, don't take trades in between. In the middle of this zone, please
Mhm.
don't take any trade, no matter how attractive it looks, because you're only scalping for a few bucks.
Correct. Very true.
There's no point in taking the trade. You're better off taking a trade which is going to give you big bucks. And you always have a danger that this, instead of a reversal, it becomes a pullback. So one more stop loss hit you will face. In a day, how many stop losses will you take?
That's a very
And
good.
you will say, yeah, the system is not working, I'm not going to trade this. Then you will go back to other Telegram groups and start looking for courses. This is what typically people do, no?
Yes.
So if you make, you have to cultivate a discipline of number one, entering only at support when you're buying. When you're selling, enter a PE trade or a sell trade only at resistance. Look for a confirmation from the Heiken Ashi candle that a low is broken or a high is broken. This gives you a much higher probability trade, which will give you super profits on a trending day.
Let me just try to see it on Monday next week, and then let us see how it takes it out. But the way how you are explaining it's really good, which I have to just
No, it
appreciate.
is not just an explanation, Ramesh. If you are afraid to trade, let's say options,
Hmm.
just trade equity with the same principle. No,
No, see, the options itself is a really good thing. See, only
no. People are afraid of trading options because the loss can be higher.
correct.
I can relate to that. I've also faced that kind of problem. Okay, until I found a system which is working very well for me, I was always in doubt whether I'm going to make a profit or loss today.
Hmm.
With that state of mind, when you approach your trading day, you're definitely going to have a loss.
Very true.
Actually, in philosophical terms,
Hmm.
what they say is the world, according to what you see,
Hmm.
is based on your own feelings and your emotions.
Very
If you
true.
feel it's a bloody lousy world and everybody is against me, you will only see the bad things in the world.
Correct.
Similar to that, if I approach the trading day saying I should
Hmm.
protect myself from loss, on that day I am bound to incur a loss. Some kind of a law of nature or something like that. But that's what happens. Whereas if I say today I should take at least 80 to 100% profit, that day becomes a good day for me.
Yes.
So it's all in the way you feel about yourself and the world around you. That's what most of in fact, there is one guy called Neville Goddard
Hmm.
who says, whatever you imagine and accept as true,
Hmm.
that will get achieved in your life at some point or the other. Okay, he says, if you can imagine yourself having achieved your dream, right, and
Correct.
keep on holding to that feeling of happiness when you achieve your target or whatever, that will translate as a reality in your world.
Okay, one more question, Swami sir.
Mm,
Like you are mentioning it about a OTM, like little bit far
correct,
away options which you are picking it at the trade, which is less
correct,
than 100 or whatever.
correct.
Where I normally go for the nearby option trades. Let's
Yes,
say if
I
you
told
are
you that this is a fallacy we need to address.
correct.
Okay, the fallacy is simply this, Ramesh.
Hmm.
Let us say you buy let me just pull up my calculator. Let us say you buy an option for 600 rupees.
Okay.
You've taken an ATM or ITM option.
Correct.
This moves to 900,
Hmm.
correct? So my
Yes.
profit is what? 300 on an investment of 600,
Correct.
which is only 50%. Not a
Okay.
bad profit, but it's only 50%. Now
Okay.
look at my game here.
Hmm.
Okay, I enter a trade here at 64 rupees.
Mm.
It went up to 122 rupees.
It's 100% return.
Correct. 122 minus 64 divided by 64. I made 90% profit when you made only 50%. Correct?
Correct.
You might have traded, let's say, one lot of 600. I might have traded 5 lots of 64.
Mm.
So I make much more money than you do.
Correct, yeah.
It is in this sense, I said what you're thinking is a fallacy. A lot of people, when you say what should be the strike price I should select on a expiry day, go to any Telegram channel, people will say ITM.
Mhm.
I feel they're stupid. ITMA, you're not going to make big money, percentage wise.
But OTM movement is
In real terms also, I'm going to make far more money than what these guys will make. Simply
very
because
true.
I buy more lots, I get a 90% profit on more number of, more quantity. So I make much bigger profits than those guys, no?
No, what you say is true. Yes.
Hmm?
If that side that it happens, yeah, that's good.
It was only in this sense I said what your thought process is a fallacy.
Mm.
Nothing else. If you still want to trade only ITM or at the money options, feel free to go ahead. But you are limiting yourself in terms of what you can gain.
Correct.
I would say if you are holding the trade for next couple of days,
Mhm.
then you have a chance of making much bigger profits than me. Your 600 can become 1,500 also,
Possibilities are there. Yeah.
right? But in an intraday context, I feel a deep OTM contract gives me much bigger money than what I can find on this thing.
Correct. Yeah,
What
thanks
you
for that.
focus on, wristband, Secret by Rhonda Brand. Yes.
Sir, Amog has a suggestion. He said for guessing the trend.
Yes, tell me, Amog.
That won't be.
Amog, are
Yes,
you there?
yes, I am. Can you hear me?
Yeah.
Yeah, we can hear you here.
Yeah. That actually, that don't need when we plot support and resistance lines over there, no, sir.
Mm.
Uh, this actually what I do is I will open the option chain and watch what the sellers are going to do.
Mm.
When we take the PE trade
Mm.
and it is moving to our direction,
Mm.
then the sellers will push it down actually, like selling the C strike.
Correct.
When we keep on watching the option chain, like for few time for after taking our trade
Mm.
instead of a P&L, then we can
Mm.
watch that they are going to push it or they are going to release it out of the trade.
Okay.
So we can guess the trend, like having screen time of some few days and having time of the option chain. We
See,
can
the
guess it.
problem with this, I have only one complaint about this. If you keep on watching the option chain, right, you will find a lot of changes happening.
Yes, sir. Yes, sir. That is also
Writers will come, writers will go, they will unwind, they will do short covering, all those things will happen.
yes,
At the
yes.
end of the day, everything will get respected where it'll get expressed as a form of change in the price. Okay,
Yes,
the
sir.
price will discount everything. It will take into account all factors, whether it's option writer, whether it's some piece of bad news, good news. Everything will ultimately get respected in the price. Okay. Now I am in the middle of an option trade, right? If there is a bad news or a good news happening, let's say in banking sector,
So
immediately what is going to happen is my stop loss will get hit on the PE trade. That's the first impact, no?
yes, sir. Yes.
The moment it hits the stop loss, I look at what happened. Suddenly somebody says market may there's a good news. Then I shift over to the CE side and try look for a buy entry. Until and unless my stop loss is hit, I will not look at the CE side for my trading. Once I'm into the PE trade, the evidence has to be there in the form of my stop loss getting hit After that, I will say, yes, my stop loss has got hit because there is a change in the bias. And after the change in bias, which is proving that my PE entry was wrong, then something has to be right. No, CE entry has to be right. So I will focus on the CE entry and try to take that wave. If you try to predict on the basis of option chain data, you will never be able to trade, because during the trading hours, these things will be rapidly changing. You will keep on refreshing and keep on seeing this. There will be
Actually,
a
I
heck
did
of a
that
lot
for
of
actually.
movements here.
So what I used
Hmm?
to do is actually I will take a screenshot of the outfit there every half an hour.
Mm.
That will be lot. That will take lots of screen
See,
time
if you're an
to
option
adjust.
seller, no, it may have some relevance because you don't want to lose big money.
Yes, yes,
Suddenly, a big trend develops. You're going to lose big money, no, if you're an option seller.
yes, sir. Yes,
You are happy as a seller only when the price is not going anywhere. If it is going sideways, you are happy, right?
yes, sir.
So, for an option seller, you can keep on refreshing and taking screenshots and comparing. But as an option buyer, everything what I want to know will get reflected in the price behavior. If the price is not going to hit my target, it's going to hit my stop loss. To hell with it, man. No.
Yes, yes, sir.
That is why I said don't do too much of analysis paralysis. Keep your trading simple.
Nothing to add to that.
Thank you. Anyone has any other questions? I click on something and something else comes. Okay, rejoining.
Sir, I want to ask about momentum.
Yeah, yeah.
Like on Friday,
Mm-hmm.
as you were saying, we were frustrated, but
Yes,
the main momentum come after 2 or
correct,
around 145. So any
correct.
way to analyze that this is we are frustrating because of momentum. So
See, if you're frustrated, you're frustrated. What is there about it? Right? I'm telling you again and again, please focus on either stop loss hit or target hit.
okay,
Okay? It will keep you away from all troublesome thoughts. These are the only two possible outcomes of any trade. You can have a loss or you can have a profit. We are trying to limit our loss by setting a stop loss. If the stop loss hits, okay, fine. What is the big deal? Let us lose for one day, no?
okay, sir.
See, emotional balance is very important in trading. And if you're going to lose your cool every time when the price is moving against you, you will only end up feeling tired at the end of the day. It has not helped you. Most of the time, whatever you are afraid of, no, it usually doesn't happen 90% of the time.
Then,
It's only your mind trying to say, I'm going to protect you. That's all it does. And 90% of your fears do not come true. It is just imagination in your mind. So I'm saying stop imagining. You put your stop loss, you put your target. Let the trade run. As long as it doesn't hit your stop loss, continue with the trade. It will also prevent you from one more thing, from taking your profits too early. If you decide that I will wait for my target to achieve, until that target is achieved, your mind will not jump from one thing to another. You won't say, okay, I'll exit with 10% profit instead of 100%. You will hold on.
one point. Mm.
I know it is difficult to cultivate this kind of psychology in a live trading scenario, but you need to cultivate it at some point at a time or the other. Where the hell is
Hello.
it going?
Hello, sir.
Yeah, tell me.
Sir, what browser are you using for this?
I'm using a browser called Vivaldi. I'll write
There
it
is
in
a
the.
facility of one side P, one side C merging.
No. There's one side C, one side P is Zeroda feature, not the browser feature.
Sorry, sir, I don't know about it. That's why I asked.
Okay, one side P, and what you do is you go into any chart, then
Okay.
go to display, and you keep scrolling down until you see this multiple charts.
Okay.
You select two charts. So you put C here, P here, and click done. It will open in a separate window like this.
Okay. Thank you, sir.
You're welcome. Yeah, Ramesh can take that advice. Any other questions from anyone?
I think we all are true in this.
Now, basically, what I wanted to know was like today's session, does it address most of our concerns regarding false entries, drawing accurate support resistance levels?
Yeah.
These are the two biggest problems we face, no, as when you're doing live trading. You start jumping from one screen to another and seeing whether you should take a trade here, whether I should take a CE trade or not.
Correct.
Now that is answered by only one thing. Unless it hits the stop loss of PE trade, we are not going to look at any CE entry.
Correct, yeah.
If the stop loss is not hit,
Sir,
yes, ma'am. Yes, Bella.
sir, the line chart you plotted on Heiken Ashi, or the line chart you plotted was on Heiken Ashi or candlestick, simple candlestick?
Line chart doesn't look at Heiken Ashi. It looks at the closing prices of each day or each candle and keeps
No,
plotting the line.
I want to ask the line chart you acha, that will select the normal candle only. Okay, I got
Correct.
it.
It's the normal closing price of each candle, not the high, low, and all
Yeah,
those
yeah, yeah,
things.
yeah, yeah. Yeah. Yes. Okay.
Sir, I had a suggestion. So, as Mr. Ramesh had mentioned that until the trade reverses on the Heiken Ashi, would that be the ideal point to exit the trade rather
No,
than, I mean, wait?
no, not
Okay,
at all. The moment Heiken Ashi changes color and reverses, you will
right.
find that you're exiting at a very late time.
Okay.
Is it better to exit at resistance or is it better to wait for a change in Heiken Ashi color? I would say it is better to exit at resistance, especially when you're trading options.
Got it.
If you're trading normal equity stock, then
Right,
you could always exit when the color change happens. It's not going to do much damage. Because of
right,
volatility in options, especially Banknifty,
right.
it it is better to take profit when you see it.
Absolutely. Got it. Yeah.
Swami sir, can you just try it? Escorts 1280.
Escorts?
In any one of the escorts, yeah. 1280 call. One two eight zero.
Oh, sorry. I'm typing everything wrong.
Escorts 1280. Yeah.
Escorts space 1280C.
Yeah.
Okay. This is what the chart looks like. Friday.
See, on both the days, on the 8th and the 4th, the same option had given a very good return.
Ah,
The call option and this thing. But in the 9th, it was in the sideways for some time and then it came down.
mm.
Actually, still it has got an option to fire. Whether do you think the volume also will be helpful in this in the stocks?
In stocks, actually, when I'm trading stock options, I only use top gainers and top losers.
Hmm.
I don't look at random F&O stocks and trade. See, if I look at top gainers and top
Hmm.
losers, or even if I look at, let us say, the sectoral indices, when you see the sectoral indices, let's say at around 945,
Hmm.
you know which are the sectors which are performing well. Let us say pharma. Okay, in pharma, the stocks which are performing very well with highest percentage change is Cadila Healthcare and Cipla and Alchem. Now, let us say Cadila Healthcare is my top preferred stock, or even Cipla, right? This is likely to be in the top gainers list. Let us cross check that. Cipla is in top gainers.
Hmm.
If you move to F&O securities, you have Cadila Healthcare and Cipla, both are in top gainers.
Hmm.
So I would select one of those stocks. Let us say Cipla, though it had a lesser movement. Now Cipla's market price on open was 840 rupees. Okay.
Cipla 840 was good. 840 call was good actually.
So if you take, instead of 840 call, when you see a stock performing very well in the sectoral indices, for that sector, it is one of the top stocks. You can expect at least a 3% movement.
Yeah, Adana, that one which I have to understand, like 3 or 5% moment additional.
It can move 5%, it can move 10% also, Ramesh.
Correct, but
But
you are suggesting 3%.
I'm just taking 3% because I like to trade OTM option rather than ATM option.
Yeah, that I have to just understand. And I have not tried it at the 3% OTM option.
No, let us say 10%. Yeah.
Let's say,
Okay.
yeah, 3% take it
840 it
for
started.
the
Okay.
side.
Let us say 840 it started. Opening price was 840. So 10% away from that is 1.10, which means 924.
Correct, 920.
So let me take 900 call or 920 call
Correct.
for Cipla. Shall we take 920 call?
900 you take it better for us, rounded off figure, maybe.
No, it's okay.
Okay.
You see this chart. Where would have been your entry level on 9th April? Shift to
Normally,
Heiken Ashi. Shift to Heiken Ashi. Red candle high. Let me make this bigger. You had an initial up move, then you had a pullback. You are entering after the break of this pullback, after the closure of the pullback. Now, if I shift to the normal candle, I'm going to enter at 10:30
correct.
at 5 rupees or maybe 5 rupees 25 paisa, depending on the slippage and all those things.
Yes.
Let us say I've entered this trade at 5 rupees 50 paisa. Then I just held on to the trade because my stop loss was not hit. My stop loss was here. My entry was somewhere here. Let's say 5 rupees 30 paisa. Okay. As long as the stop loss doesn't hit, I'm going to hold on to my trade. It went higher and higher. Did a lot of up and down thing later. Finally, where did it end? Let us say you started looking at this thing. You felt my profit is enough. I'll take my profit at this level,
It's
which is
almost
18 rupees 60 paisa.
3 times minimum.
So 18.6 minus 5.3. I made 13 rupees, let's say, as a round number. What is the lot size of Cipla? 1,300, right?
1,300.
So 13 times 1300. You made a profit of 16,000 rupees. On what investment? You invested 22,000 rupees on your option trade.
That
No,
is
in
the
fact, you invested much lesser, 5.3. Ouch. Okay, I still invested
65,
30.
6500, almost 6500.
No,
yeah, approximately
6500, yeah. 6700 something.
yeah,
something
somewhere
like that.
7,000, let's say.
So yeah, 2x, 200
1300
times.
into 5.3, which is 6890.
Yeah.
My
So
profit was
twice,
16,000
250%. Yeah,
minus.
almost.
I'll just round it off for easy calculation. Divided by 6,000. No,
Yeah.
7,000. I made 128% profit. The advantage of trading a stock option based on top gainers or the sectoral gainers is huge, because one of them is definitely going to hit the top gainers list. Look at Aurobindo Pharma, let us say. Why go to all these top fellows only? Can we make money in Aurobindo Pharma?
So what time is the ideal time to look at these top gainers?
Around 9:45 is a good time because the initial volatility has settled down.
Okay.
So after that, you start looking at which has been actually performing well. Okay, Auro Pharma is like this. If you look at your Heiken Ashi candle, you will not find anything. There's no entry you get. This is one weakness of the Heiken Ashi thing, because where you could have entered the trade right at the beginning, if you wait for the Heiken Ashi signal, you don't get an entry. Still, let us say if I don't get an entry in Heiken Ashi, I don't have to lose hope. I can quickly say I'm going to trade the opening range breakout. If the high breaks, I'll take long entry. If the low breaks, I'll take a short entry. Let us say the high is breaking, right? And I put a buffer also somewhere here. I can take an entry based on that. Again, start looking at the opening price, 902 rupees.
Sir, Ashmita Patel.
What Asmita Patel?
Sir, you mentioned no. This way she teaches no. You
Yeah,
remember?
yeah. I mean, most of the YouTubers teach this way.
Yes, yes,
Opening
sir.
range breakout is one of the famous strategies
Yes, sir.
available for trading. I'm definitely not going to kick this strategy because I know it works very well. Sometimes it doesn't give you the results which you want. But if you are able to trade overB in this top gainer stock, why will it not work? Anyway, momentum is on the upside. So once it breaks the first 15-minute candle range, right, you start looking for a entry here. If you want a confirmed entry, you'll take an entry even after the second candle is over at the high, right? So it started with what? You had 902 rupees. So let us say 902 into 5%, maybe 1.05, let's say. So I will look for 950 call. Fat finger error. Now, if I had entered after the break of the second candle high also at 12 rupees, my price went all the way to 27 rupees. So 15 rupees on 650 lot size. You made 10,000 rupees by investing 21,000 rupees, maybe. Sorry, not 21,000, because the opening price was 16 rupees and you entered at 19 rupees. So 19 into 650. So you invested 12,000 and you got a profit of almost 9,000. Decent enough profit, man. Correct, no?
Sir, in this, like if a stock is trading at all-time high, so we don't have any previous support, previous resistance, right?
Correct.
So how do we decide to exit in that case?
In that case, what you do is you simply put on your pivot points from the studies. Pivot points will be based on what? High, low, close calculations, no? If the price is not reached somewhere in the past, still your pivot lines will be there. You can use that as an approximation for your exits. What I would do is I would mark horizontal lines on every pivot line. One or the other line anyway has to be reached.
And so I have one silly question, like this upper circuit. I'm not aware about that much. It's like people say if you're stuck in a upper circuit or lower circuit, then it's hard to exit or that. Does it apply to option as well, something like that?
No, yeah, it doesn't. Option may, what is important is the volume being traded. So if you trade some stock where the volumes are not much, liquidity is not much, then you will may get stuck. You will exit at an unfavorable price and close your trade. But talking of upper circuit and lower circuit, there is something called securities over securities greater than 20 in the top gainers list. Okay, each of these stocks invariably would have hit the upper circuit. What I do is I look for this kind of vague stocks. Gujarat Alkali, let's say. Here I take an entry within the first 5 minutes of opening. That I'll make an entry, I'll put my stop loss and let the trade run. Within 5 minutes or 10 minutes, my upper circuit will be reached. I don't have to do anything. End of the day, Zerodha has to bloody square off. I've traded many times like this. Just take the securities greater than 20, look at some known name, Butterfly or whatever, Gujarat Alkali, Agritech. I look at this and quickly take a trade. And you look at this percentage change, right? You'll, right, this keeps changing over. From 20% it is getting stuck. And this KDDL, I don't even know what stock this is. I don't really care, no, if it's going to give me this kind of return. It opened at 40 and went up to 59 rupees. It's a very powerful way to trade if you want to make profit on stocks.
Sir, one question. You were marking the support and resistance on the options chart.
Correct.
But it would be logical to mark the supports and resistance on the spot chart only, right? What is the guarantee that the resistance and support that you marked in the options chart will be respected?
The guarantee is that the option depends on your price of the option depends on volatility.
That again spot that will reflect in the spot chart itself, right?
Spot chart will show the trend, but actually what is the price being driven in the option chart? It is driven by volatility, no?
Yes.
It is that is caused by what? Change in delta.
Yes.
Right. If change in delta is causing all these movements, it is better to always work from the option chart. In fact, I'm saying don't even look at the spot chart here. Forget it. Look at it only for the trend.
Okay.
You forget about the spot chart after that. You focus only on your option chart. You entered somewhere. You need to exit somewhere. Is it a right point to exit here? That is all you need to see, no? Is there a support or resistance there? What I do is I mark the support and resistance prior to my entering the trade.
Okay.
How do I mark my support and resistance? I look at my line chart and draw. I know price has been here in the past. Why will it not go there again? Why will it not go here
Yeah,
again?
but that is subjected to the volatility on that particular day. So it
Correct.
might change. So it will change from day to day. So
It will
the
change from
optimum
minute to
price.
minute, boss. Let it change. No. Price has to go somewhere, no?
Yeah, it will go, but
So
it might
if
not be
I'm
restricted,
in an
right?
uptrend, right? If I'm in an
Yeah.
uptrend, price has to go up on the CE. If I'm in a
Yeah,
downtrend,
yeah.
price has to
What
go
I'm
up on
trying
the
to
PE,
say is,
no?
yeah, what I'm trying to say, when
Mm.
you say you are an uptrend,
Mm-hmm.
you will mark one level. Okay.
Okay.
So, and if the volatility on a particular day is more,
Mm.
then the next level will be reached, right? So in that
Correct.
case, our profit will be
I'm not
less,
saying
right?
blindly exit. No, I'm saying you look at the price action at this level. So see here, this candle, let me enlarge it for you. It broke through this resistance with a strong candle and it went through the next level of resistance. After that, you look at whether price has been rejected at the top. Then you see the next red candle forming. Then you exit. No,
Okay.
why would you want to exit here and miss that move? The spot chart
Yeah.
does not help me to determine my options exits. Only my option chart will tell me where to exit.
Yeah, correct. Correct. Yes, sir. Understood.
Okay. Yeah, that scanner, it's already there.
Sir, one more
Yeah.
doubt.
Yeah, yeah.
Nothing, sir. Actually, when we are going to trade stocks based on the open range breakout,
Mm.
what we do is we'll mark the level uh, when it's going to breach that one something like 945, 945 to 950. We
Okay.
will mark the level, and if it's going to break that level, then we're going to buy the or
Correct.
in the direct equity market. Then
Correct.
what is the risk we are going to get to? Like when we are going to exit the trade, when it's going to the negative P&L is going, when we are going to exit.
You see, your 940, 950 candle method
Hmm.
is only going to tell you what should be your bias. Okay.
Bias. Oh,
Now, look at ninth candles on Oro Pharma itself, which was a top gainer. Okay. Now, where is my 940 candle? It's here. 935, 940 candle. I'll mark the closing price. Let me enlarge this first. So 940 ka closing price. I made an entry here. Okay. Then I wait for 950 candle. 950 candle closing price is here. Now, if my 950 candle is higher than my 940 candle, I say bias is up. Okay.
okay.
Now, I'm not going to blindly enter the trade at this level.
Okay.
I'm going to look for my Heiken Ashi signal. Only when I see a Heiken Ashi signal, I will try to take an entry above the high of that Heiken Ashi because my bias is up.
Yes.
So I will probably enter here after this break, which is still the 950 candle close price. And after that, I'll ride this entire wave. And my stop loss rules are the same. Low below the low of this entry candle.
Got it.
And you forget about all these 940, 950 candles and all. Those are also not required also.
No, sir.
Right?
Actually, in that time only, actually, the initial bias of the market will be settled, right? As you said, that will happen actually. The morning.
I'm saying click
So do you also look at the Nifty bias also, or just the index top gainer?
index top gainer only because top gainer means what?
No, sir. If Nifty is also down, still you look at top gainers, or you look at top
No. If
losers if
if
Nifty is
if
down?
Nifty is down, I will look at if this
Losers.
is red, I will look at losers because the probability of gain is much more here.
Got
Correct.
it. Right.
If Nifty is green, I'll look at top gainers.
Got it, sir.
So coming back to the stock trading question, I'm saying don't even think about any system or strategy here. Blindly bloody mark a random line and say to yourself that I'm going to buy if the price crosses above this. I'll keep my stop loss at the low of the entry candle.
Take some 2 to 3% and exit. That's it. That is more than enough.
Correct. You take your money and get out now. There's no need for using too much of brain in stock trading. And if the more you try to think about strategies and all, no, you're bound to lose. Same principle, stop loss is defined. Take an entry above my buying line. I'll just take a trade and move on with my life. If you don't want to trade on one line, trade with 2 lines. You say buy above this, sell below this. That also is fine. And again, wherever you click, you're seeing price is reacting. This is all random lines only, no? Don't complicate your trading process. Make it as simple as possible. You may have a couple of losses. So what? It is not going to break you financially. Go ahead and take that loss. It's a learning. But I've always found that whenever I trade, whenever I take a trade based on some random line, I've always been in profit. Simply because I don't think beyond this thing. I don't even think what will happen if price falls down. If price falls down, it will hit my stop loss. That's all. I just don't even want to look at my chart after that. End of day, I'll see what happened to my trade. Before Zerodha started charging us for this auto closure, I used to just close my computer and go away after placing the trade. End of day, after the 3:30 is over, maybe around 4 o'clock or 4:30, I look at my P&L. And it can give you very big gains.
So ideally, I would suggest, I mean, when you are starting out, you should use the one OCO order. So one cancels the other.
Correct.
So that will help take the emotions out. Maybe we can have a fixed risk reward ratio or something.
Correct. I used to trade with bracket orders earlier. This was the same thing I used to do. I used to say 2% profit, 1% stop loss.
Correct. So that's what one cancel other, that is the same thing. You can set the target also and stop loss also.
Correct. It is the same thing. I was pleading
Right.
with Zerodha, please don't remove bracket order here. I'm not trying to take advantage of a margin, but I want this facility to put stop loss and target and walk away. Those guys said you use GTT order.
No, sir. I think OCO orders are still there in Zerodha.
OCO orders on GTT is there.
No, normal also is there, sir.
Normal, it's not there. If you see,
Margin
now regular cover order
So
and AM
cover.
Cover order only gives you stop loss. No, it doesn't help you to fix target.
Okay, yeah.
Bracket order used to give us target and stop loss.
I think on my app it showed yesterday. I don't remember.
No, sir. No, actually,
they have removed it. I think only a couple of days back.
No.
Oh, is it?
Yeah.
Go for buy, sir. I will show you.
Yeah.
Go for stock and buy. I will show you. And select more actually below the quantity.
More.
Acha, it's there, huh? No, it's not there.
No, sir. Regular. Above next to
Regular.
Okay. Regular may, yes, I know.
Yeah. Immediate or cancels.
Correct. But IOC may, what does it do?
No. This is not IOC. So that was OCO.
Where is OCO?
No, sir. This is regular, but I think I had seen this around 2-3 days back.
You have it for long term. Once you click on CNC, then it will ask you for stop loss percentage and target percentage.
Correct. Yes, I think this. Yeah, I think this is GTT.
Correct.
For long term only, like the delivery.
This is for 1 year. This is valid for 1 year.
That's what. See, I want to do intraday trade.
Intraday
It
is
will
not
not allow
allowed.
me to keep 0.5% stop loss and 2% target. It will say minimum stop loss should be so much.
Right.
Let us say no. I will say stop loss for this trade 1,799 wala. I'll take 17 rupees stop loss.
That is
Oh,
percentage.
this is percentage. Okay, let's say 0.5%, and I'll say target is 5%. GTT stop loss should be less than 0, so I should make it as minus
Minus, yeah.
0.5%. Markets are closed, it says.
Yeah.
If I do intraday, this thing doesn't do anything at all. So I go to long term, set my stop loss, and I can exit at the end of the day if I want.
I think this is because of intraday volatility. Maybe they are not sure both the sides will get triggered at the same time.
Maybe. But that was a very useful thing to have in bracket orders,
Right.
because on momentum trading, what I used to do was I used to look at the money control app. Top gainers I used to take if Nifty is green. So I used to trade the top 3 stocks, one after the other. So first I'll put an order for 0.5% stop loss and 1% target. The moment
Right.
target is hit and the trade is closed, immediately I'll enter my next trade for the second stock,
Right.
then the third stock. That way I used to keep doing it.
Right.
It had a lot of uses actually, that bracket order thing. Zerodha didn't want us to benefit from that. It's okay, from their point of view, probably they're right. Only thing is, it didn't help me. So stock trading may don't do a lot of thinking here. Just draw some line and say I'll buy above this or sell below this. Let us say you've drawn a line here. Price went up. Okay, you bought. Then it fell down. Then you take another sell entry here and try to exit with your 0.5%, 1% profit. It is fairly okay, I guess, in a stock trading scenario.
So I think, sir, the questions are over. So thanks a lot again, sir, to take your time out. So I'll stop the recording right now.
Yeah, do that.
Yeah.
And thank you very